You have massive short positions on both COMEX and the LBMA by the commercial banks, who have been getting blistered by the continual rise in the price of gold, really, and silver, really engineered by the countries in the global south who have been accumulating gold and silver hand over fist, amongst other commodities too, rare earths and base metals and even soft commodities. But we're seeing a drive to accumulate real things, which is a very dangerous position to be in for a commercial bank who's naked short. On COMEX, in the case of the silver market, short between 750 and 800 million ounces, about a whole year's worth of global mine production. In London, many times that, between 4 and 6 billion ounces short, naked short, paper short, for whatever reason. We've talked a lot about that, the military-industrial complex and the need for silver. Those numbers are irrefutable, yet not calculated in the Silver Institute supply-demand number. Another 260 or so million ounce shortfall between supply and demand for mine supply this year, according to the Silver Institute. And yet you have 8 Western banks shorting the prices the way that they have been. And I think what it really was, this decline. And first of all, let's say the decline was in silver futures. Let's just focus on silver for a moment, and gold futures. But because really it's the futures market, the tail wagging the dog, that controls the price. It should be the other way around. It should be the commodity controls the futures, not the paper futures controlling the commodities. And it's kind of backwards. At least it's mitigated, or it's migrated to that phenomenon, one that may not last forever. In fact, it shouldn't be this way, but it is. And when you have very, very well-heeled banks who have the ability to create a reality through paper contracts, either long or short, it creates some distortions. And those distortions were very real. And I think this big decline in the futures over the past couple of weeks was a result of, or a belief, and I think the traders believe that that the people believe that the Trump administration was going to halt the upward trajectory of the irresponsible fiscal policy and the massive spending, federal spending addiction that we have, bringing out Vivek and Elon to trim the fat. And of course, choosing Bitcoin over gold and silver as the next key component to the sovereign reserves, all of which I think is irrational. But they used that irrational exuberance to push the ball down the hill. And what we saw, and that being the shorting, they shorted the price just to get it going in that environment. And let me just simply say that everyone should be exuberant about the changes that Trump wants to usher in his cabinet, the changes, the addressing of the things that have made people wonder if we were living in bizarro world or not over the last 4 years. All of that's good, but the financial woes, the fiscal woes, well, they haven't changed, and they won't change under President Trump. And I think that was a realization that the traders had. And when we look at the Commitment of Traders report that came out, it indeed bears witness that that's exactly what did happen. The commercial banks reduced their short position by almost 16,000 contracts in gold at 100 ounces apiece, and almost 6,000 contracts covered in silver, meaning they drove down the price. The hedge funds all sold, locked in their profits, and it kept triggering sell stops. More selling begets more selling begets more selling. That's exactly what they wanted. When you're short between 4 and 6 billion ounces of silver cumulatively, these Western banks, 8 of them on the LBMA, and 800 million ounces just under short on COMEX, every dollar's rise in the price of silver has a little bit of a bite to it, and actually could represent an existential threat to these banks. And so they use this opportunity to kind of, I guess you could say, help get their balance sheet back in order at least a little bit. And one of the hallmarks of this bull market that we've been in for a while now is the sharp, steep corrections followed by massive bounce back. Now that's something I never saw in the 35 years I've been doing this. And normally in the past they would step on the price of gold and silver, and they'd then step on its neck, and it would just be down for the count for a long period of time. Sometimes years it wouldn't come back, and here we are, right back to almost to where we started. Not quite. Yeah, right now we have gold up $18 again at 26, just under 26.70. So it's not quite where it was when it got hammered. It fell almost $200, but just in the last 3 trading days, we're up pretty darn close to $100. So clawing back at least halfway back to where we started, and I think that's the realization that gold and silver went on sale as a result of this drubbing, if you will. And the fact that it hasn't changed the fundamentals is something I think that's not lost on the big traders, and you're seeing them accumulate more and more and more, challenging these short positions. And this is something that I don't expect to stop, yet I don't expect this to move straight up. I think there will be periods of exhale. Markets have to exhale, and we did see that, of course, engineered a little bit by the help of some big banks that pushed the ball down the hill. But no, the narrative has not been rewritten whatsoever. In fact, quite to the contrary. I think it's just beginning in terms of inflation, in terms of lower interest rates, in terms of loss of purchasing power, in terms of debt accumulation. This is what the Trump administration is talking about. Yes, they'll trim the fat in terms of bloated government, but in terms of debt and debt spending and a weak dollar and lower interest rates, these things are baked into the cake. And there really isn't an easy way out of it. So I think that's why you're seeing the traders around the globe jump right back into the water here and pushing the price right back up on its way back to where it was when all of this carnage started right after the election. I do believe that, I try and be very consistent in saying our two communities, our two camps should be complementary, not adversarial. In many respects, we see the same things. Now, I would argue, whether or not people want to admit this, that the Bitcoin camp is more concerned with making a profit, whereas the gold camp is more concerned with keeping what they've worked so hard to build their whole life. But the reasoning behind it, at least to walk in the door, is very similar. We see the same inefficiencies in a centralized government. We see the problems with holding your value in dollars. We see alternatives to the system as a way out. And I guess there might be some people who own Bitcoin because they think it's better than holding dollars from a preservation standpoint. It's very volatile, probably not the best place to do that. But nonetheless, the two camps should be complementary to one another. In fact, I think taking profits in Bitcoin and putting it into physical gold is probably one of the best ways people can be guaranteed of leaving the casino with money in their pocket. It's no different than every hand you win at the blackjack table. Put a green chip in your pocket, and when you leave at the end of the night, you'll have a pocket full of chips. And that would be my advice to people who own Bitcoin. And I own a very little bit, just enough to say that I won't punch myself if indeed it goes to levels that people think down the road. But to your point of the strategic, one other point, and that is that you mentioned all the banks, the banks around the world, the central banks, they don't own Bitcoin. A couple do, most don't. It's funny, when I think of a contrarian standpoint or viewpoint, all you hear is Bitcoin, 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 and yet the central banks don't own it. They just buy gold and silver. They're the most well-informed traders in the world. Guys like Rafi Farber, who I have an interview with later today, would call it a government-based psyop. Now, that may be a little strong, I don't know, but all I'm simply saying is if you want to look at things from a contrarian standpoint, why don't the central banks Why are they not buying it with voracious appetite, instead buying metals? And yet it's the public, and all you hear in the periphery is Bitcoin, Bitcoin, Bitcoin. It's an interesting thought experiment. But to your point on selling gold to buy Bitcoin, there was a Bitcoin meeting, a conference in Tennessee not too long ago. And it was highlighted, of course, by Trump speaking and saying just that, talking about advocating for a Bitcoin strategic reserve. Certainly he, I believe, was genius in going after the crypto community. You have a lot of younger folks there who would look at him as being anti-establishment and part of a new generation of thought leaders, and instead of the old stale Washington elite. I applaud him for that. And I don't see anything wrong with having a strategic account used to pay down the debt, as he talked about. People kind of miss that point too. He was talking about having a strategic Bitcoin account, letting it rise to a level sufficient enough to help pay off our debt. Love it. But there's one very crucial point where I think is not being focused on enough, and that is the person who followed Trump with Senator Cynthia Lummis from Wyoming, who came up and said, yes, I believe we should sell some of the gold that the Treasury owns and held on behalf, that the Federal Reserve is holding on their behalf. But first we should revalue the price of gold to a level sufficient enough to allow us to sell some of that gold. And gold is held in every central bank balance sheet, and you can't make it up, in an account called the gold revaluation account. It's the name of it on every balance sheet for central banks across the globe. Over my shoulder, you have Roosevelt, who, after confiscating the legal tender gold that everyone had in their pocket, different than it is right now, devalued the dollar by 40%, and gold went from 20 to 35, just like that. It's been done before. The head of the Dutch National Bank continually speaks of revaluing the price of gold because they have 35 billion euro in gold on their balance sheet that they, it's valued at, or 20 billion, of gold valued on their balance sheet, valued at $35 an ounce. And that's the old Bretton Woods price. Hasn't been revalued. Now they could revalue it to the current levels, or maybe they revalue it to a level sufficient enough to offset their liabilities with assets on their balance sheet. It's not so outlandish. In a world where Bitcoin is going to be $100,000, why couldn't gold be $100,000? As crazy as that sounds. You take the central bank intervention out of the metals market, who knows where price discovery would be with gold and silver. But let's just do a thought experiment. At roughly $130,000 an ounce, if the Treasury said to the world, any central bank that wants to give us their gold, we'll pay them $130,000 an ounce for it. What the hell does the U.S. government care? We can print that money just like that. And as foolish as that sounds, you offset immediately with the 8,300 metric tons held at, supposedly held by the Treasury, or by the Fed on behalf of the Treasury. It hasn't been audited since 1953, but let's just pretend it's still there. At roughly 130,000 an ounce, your debt is wiped out against your assets. I mean, it's your balance sheet is nice. That doesn't take into account the unfunded liabilities. But the point of it is that I have always wondered what they would do. They being the government, would they do what all governments have done prior? Inflate their way out of this problem? Would they default? Probably not.
The US government may be looking at revaluing gold to help tackle its national debt, which could have massive implications on the global economy. Now, you're in the know about how this could unfold, but you're going to need to check out the next video to understand what this means for the future of financial markets. With gold and silver becoming key players in this shift, you'll want to stay ahead of the curve. Plus, the role of central banks and their actions is crucial in shaping the market. Like, comment, and subscribe so you don't miss any of the crucial updates.